Ladies and gentlemen, good day and welcome to the Escorts Kubota Limited Q3 FY24 Earnings Conference Call hosted by Batlivala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jairaj from Batlivala & Karani Securities. Thank you, and over to you, sir.
Thank you, Darwin. Good evening. On behalf of Batlivala & Karani Securities India Private Limited, I welcome you all for Escorts Kubota Limited Q3 FY24 results earnings conference call. I also take this opportunity to welcome the management team from Escorts Kubota Limited. Today we have with us Mr. Bharat Madan, Full-time Director and Chief Financial Officer, Mr. Neeraj Mehra, Chief Officer, Agri-Machinery Business Division Domestic Sales, Mr. Sanjeev Bajaj, Chief Officer, Executive, Construction Equipment Business Division, Mr. Ankur Dev, Chief Officer, Railway Equipment Business Division, Mr. Sanjeev Garg, Head Finance and Tax, and Mr. Pradeep Singha, Investor Relations ESG at Escorts Kubota Limited. We will start the call with brief opening remarks from the management, followed by an interactive Q&A session. Before we start, I would like to add that some of the statements that the company makes in today's call will be forward-looking in nature and are subjected to risk as outlined in the annual reports and the investor releases of the company. At this point, I would request management to make their opening remarks.
Thank you, Mr. Jairaj. Good evening, everyone, and thank you all for joining us today. Few highlights of company's standalone performance for third quarter ended December 23 are as follows. Operating revenue at 2,320.4 crores, up 2.5% year-on-year. Tractor volume at 25,999 units, down to 7.2% year-on-year. Highest ever quarterly construction equipment volume at 1,800 units, up 48.9% YOY. Railway equipment revenue at 205 crores, down 17.8% year-on-year. EBITDA for the quarter ended December 23, up by 64.3%, came at 312.7 crores as against 190.3 crores YOY. EBITDA margin at Q3 stands at 13.5%, up by 507 basis points year-on-year, mainly led by improved realization, effective cost control and softening in commodity price. Net profit PAT up by 48.8% to 277.3 crores as against 186.4 crores year-on-year. Few financial highlights for 9 months ended December 23 are as follows. Operating revenue at 6,694.3 crores, up 8.6% year-on-year. Tractor volume at 74,605 units, down 4% YOY. Highest ever construction equipment volume at 4,750 units, up 53.6% year-on-year. Highest ever railway equipment revenue at 737.1 crores, up 22% year-on-year. Highest ever EBITDA at 902.9 crores, up 65.8% year-on-year. EBITDA margin at 13.5%, up 465 basis point year-on-year. Highest ever net profit in 9 months, 795.1 crores, up 88.6% year-on-year. Net profit margin at 11.9%, up 504 basis point year-on-year. This is our best ever 9-month financial performance so far. Moving on to the segmental business performance, starting with the agri-machinery business. During the quarter ended December 23, the domestic tractor industry experienced 4.9% decline in sales, with 2.35 lakh tractors sold compared to 2.47 lakh in the corresponding quarter. This decrease was primarily due to erratic and deficient rainfall, resulting in delayed crop harvest and lower rabi sowing. Our domestic sales were down by 5.9% to 24,628 tractors in Q3 FY24 as against 26,181 in the previous year. Our market share stands at 10.5% at the end of Q3 FY24. In Q3 FY24, the domestic sales export industry saw a 27.2% decrease to 21.3 thousand tractors as compared to 29.3 thousand tractors in the corresponding quarter. Our export volume declined by 25.7% to 1,371 tractors as compared to 1,844 tractors in the corresponding quarter, resulting in a market share of 6.4% in the export market. Now, approx 47% of our total export volume come from the Kubota Global Network in the quarter ended December 23. Revenue for the segment came at 1,658.3 crores, down from 1,708 crores in the same quarter last year. The EBIT margin for the agri-machinery business increased by 550 basis points to 13.8% as compared to 8.3% in the previous year corresponding quarter. This improvement was driven by softening in the commodity price, improved price realization, and effective cost control measures. As we move towards the harvest period, we anticipate a rise in the demand in the upcoming months as agriculture activity improve overall. On a full year basis, we expect FY24 Indian domestic tractor industry to degrow at around 6 to 7% as compared to record industry volume of FY23. Coming on to the construction equipment business, in Q3, our serve industry segment for backhoe loader, pick and carry cranes, and compactor experienced significant growth of around 30-odd%, led by crane industry 47% growth, compactor 49%, and backhoe loader industry up by 25%. Our total volume of manufactured and traded product reached all-time high in the quarter of around 1,800 machines, a 49% increase from the previous year. Construction equipment segment revenue came at 457.2 crores, up 49.3% as compared to 306.1 crores in the corresponding quarter. EBIT margin for the division improved by 607 basis points to 8.3% as against 2.2% in the corresponding quarter, led by operating leverage, improved product mix, and better realization. The construction equipment industry strong performance across all segments is attributed to increased infrastructure development project nationwide with the government focus on faster project execution and adoption of advanced technology and sustainable practice. We anticipate continued growth momentum in the construction equipment industry. Coming on to the railway division, revenue for the third quarter came at 205 crores as against 249.3 crores in the corresponding quarter. The EBIT margin for the quarter ended December 23 improved by 532 basis points to 18.4% compared to 13.1% in the same period last year, driven by more favorable product mix. Looking ahead, we remain committed to expanding and diversifying our product line. At the end of December 23, the order book for the division stand at more than 900 crores plus. Now I will request the moderator to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gujan Prityan from Bank of America. Please go ahead.
Yeah, hi team. Thanks for taking my questions. Reconfirming that in the opening remarks, did you call out minus 6 to 7% decline for the tractor industry in F24?
Yeah, hi, good evening, Gujan. This is Neeraj Mehra. That's correct. That's a minus 6 to 7% for the entire year.
And then if I use that as a base, we are basically looking at 12, 13, almost nearly low teen decline in the quarter 4. Can you just, share some insights on what's really that we're seeing on the ground? Is this inventory correction? Is it genuine weakness in demand? And how long do we see this persisting?
Yeah, so you're right. Quarter 4, we're looking at about 12 to 13% decline vis-a-vis last year. So overall, the year would end at about between 895 units. And this is on a high base. Last year was a very high base, the highest ever in the tractor industry. So if we end at about 890 or 895 for the current year, that would still be about second highest in the history of the tractor industry. Now, one of the key reasons for this decline primarily is, as already mentioned in the opening remarks, it's basically erratic and deficient rainfall in the western and the southern part of the country. So, the tractor industry has a direct correlation to the rainfall. That is one of the reasons, primary reasons basically. And another reason is that the commercial segment, primarily, when I say commercial, I'm talking of the brick kiln industry and the mining segment. That was a bit slow. So these two are primarily the reasons for the decline.
And just to follow up on that, because if I look at the water reservoir levels, they are also quite meaningfully down from what typically has been the trend for last couple of years. That really doesn't give confidence of things improving meaningfully, or how should I read, beyond quarter four? I get quarter four is a demanding base, and some of these, issues around commercial segment are reflected in CV industry as well. But beyond quarter four, is water reservoir level a concern, or how are you approaching F25? If you can share more color around that.
So, see, it's a bit premature to comment on financial year 25 as of now, because I have already said that tractor industry has a direct correlation to the rainfall. So, till we get a meaningful indication on how the rainfall or the monsoons will be next year, it's a bit difficult. We can get to it around March or early April, or how financial year 25 would look.
Okay. And inventory levels in the channel, is that something that we should be worried about? It's at a high level. Any comments there?
So, from EKL's perspective, actually, not to worry on the inventory levels. We are currently at about 35 to 38 days of inventory levels. So, we have been very cautious on this aspect over the last 9 months. So, our inventory levels are pretty much in control.
Okay. And the second question from my side is on the export. Now, clearly, the expectations here were of a significant ramp up with the, with the Kubota network. And what I see is, almost 20-25% decline in the volume numbers, even when the volumes are quite small right now in context of what we are looking over the next 3-5 years. So, how should we look at the ramp up of the export business? What is it? Is it the merger that we are awaiting to close, or is there anything to call out on exports?
So, Gunjan, on export, like we mentioned in the last call also, was for export will really pick up for Kubota network once the product development is ready, which is what the Kubota really needs. But if you look at overall exports, still the share of Kubota export actually is going up. Even the total volume, whatever volume we have even now, I think it's almost 40-45% range now, which it is already touched. And normally, if you look at the markets, both US and Europe are going through, downward trend on the tractor industry's perspective. So we're seeing some pressure there, but still Kubota actually has been buying, these tractors. And there's some new products which we are in the process of introducing, which will happen in FY25. And that will actually help us in picking up more volumes, for Kubota network too. So I think long-term trend, obviously, look at mid to long-term trend, obviously is positive on export. There's a lot of lineup which is happening now on the product development side. But obviously, if you look at the short-term perspective, there are obviously some concerns. The whole industry is down by 30%, luckily.
Okay, got it. I'll join back the queue. Thank you.
Thank you. The next question is from the line of Raghunandan NL from Nuvama Research. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on good margin performance. Sir, firstly, following on the tractor demand, I mean, there are triggers like, the timing of that Chaitra Navratra festive period. IMD and SkyMet both have initially indicated expectations of normal to above normal monsoon, and there could also be government support in terms of favorable policies. So given these factors, would you expect that the trend would be positive for FY25 on the tractor side? And also you will have a low base of 890,000 to work with.
Thank you for the question, Raghu. So, first of all, 890 is not a low base. It's pretty decent base. Secondly, what all factors that you have mentioned, if all those factors come into play positively, then of course we can see a positive upswing.
Got it, sir. And second question was on railways. On railways part, I mean, 9-month growth is strong, and even last 2 years growth was strong. For this quarter, there was a decline YOY. Would you consider it as temporary, given that there is an order book of 900 crore? Would things improve going forward? If you can talk a little about what happened this quarter and the outlook ahead.
Yeah, hi, Ampradesh this side. So, I believe you are right, as you are saying, it is a temporary phenomena. And as you know, the major revenue for our business comes from Indian Railways. And the supply happens based on the schedule which is received from them. So it is basically the low because of the supply schedule for Q3, which we were having. And if I talk about the order book, we have done an order intake of more than 40-50% higher than what we had in Q1 and Q2. So it is a temporary thing, and we will continue our growth momentum in the coming periods also.
Got it, sir. And lastly, to Bharat sir, sir, in terms of company's progress towards Vision 2028, can you highlight status of certain key areas in terms of A, amalgamation of Kubota Agri? Would you expect it to happen in the next 2-3 months? B, in terms of exports of component, would that start off in, say, next 3 to 6 months?
Yeah, Raghu, so on the merger front, I can give you an update. So obviously, all the approvals are in place, so the matter is now pending with NCLT. So I think it's up to now total NCLT when the final order comes. So as you mentioned, it can happen in next 2-3 months, so we're expecting it should happen, within that time frame. So on the component export side, yes, I mean, there's like you mentioned last time also, so the team has been now working on this area, and they already shortlisted, some of the components which they will be looking at exporting. And as you mentioned in the manufacturing JV in Escorts Kubota, there is already exports happening to US and Thailand for the component. So obviously those business will come to us. It's a decent business right now. It's 150 crores component are exported from EKI. And I think KI is also exporting some component to Thailand. It's another 60-70 crores. So it's a decent side of business, and there's an intent to grow that business further because there's a lot of export which they're expecting will happen from India. So definitely the team will work on that. So they are already, started contacting the suppliers and building up their portfolio. But there's a good wish from Kubota side, to shift part of the business from sourcing business from other countries, to India.
Got it, sir. Thank you very much. I'll fall back to the queue.
Thank you. The next question is from the line of Hitesh Goel from CLSA. Please go ahead.
Yeah, thanks for taking my question. Sir, this question is on TREM 5 norms. So basically, you had indicated that this will get extended beyond April 24 for less than 50 HP segment. So what is the, indication you're getting from the government? Because I think in one of the Concalls you talked about September 25 as the date for these norms.
Yeah. So there is a formal communication now. So these have been actually extended to 1st April 2026.
Oh, okay.
So no impact for the next physical at least.
Okay. Got it, sir. Thank you. Thank you.
Thank you. The next question is from the line of Mitul Shah from DAM Capital. Please go ahead.
Thank you for the opportunity, sir. Sir, first question is on inventory. So we are hearing industry-wide inventory level of around 45 to 50 days, primarily with higher inventory at leader. So we are saying our inventory 35 days. So such a huge deviation. Do we plan to increase the inventory in March ahead of that Chaitra Navratra? And how do you see that inventory situation for industry? Because that is Chaitra Navratra starting in second week. So would that be filled up in March itself to boost the March number, or it will happen only in April?
So hi Mitul. I mentioned in my earlier comments that our inventory levels are currently between 35 to 37 days, right? So for the current physical, we do not intend to increase our inventory, and we intend to continue with this inventory as we go forward. With a lot of thought, we have worked on this inventory, and we intend to continue as we get into the next season.
Okay, so second question on export side again. Nearly 47% of the sales now coming from Kubota channel, and without Kubota we were doing about 400, 500 kind of a number per month. And even after getting support from Kubota, its number is not changing. So sizable deviation. So how the strategy is working in terms of after this tie-up and Kubota channel, still we are selling farm track, power track, EKL, how the branding and on a broader basis, the strategy change after this tie-up? Yeah, so Mitul, this is Bharat Pradhan. So there is a strategy paper which has been rolled out, so obviously there are markets where both the brands are present today. So we got Kubota network as well as our farm track network. And there are countries where there's only Kubota network present and we are not there. Or there are countries where only farm track is present and Kubota is not there. So obviously where there's no overlap, there's not an issue. So both brands will continue independently. But where there are overlaps in the same country, both brands are operating. So the idea is to integrate the channel, which is why you've seen some impact coming on the numbers also. But there's it took some time to really integrate the channel. So there was some confusion with the distributors for both, which brand will operate with whom. But obviously now the idea is whoever is the best distributor, they will operate. Whether it is FT distributor, then we'll continue with FT distributor. With Kubota network, which is strong, we'll continue with Kubota network, but the same distributor will sell both the brands. So the brand will continue in all markets, so we're not discontinuing any brand from the company side. And whoever is the stronger channel partner will continue with that channel partner, and the other partner will be discontinued.
So by when do you expect completion of this dealer consolidation and any meaningful ramp up in export volume?
So hopefully within next year they should get completed. We've already started working on this, but they are going market to market. Because Kubota and I think the total market we are present in more than 60-70 countries, and Kubota is even more than that. So obviously wherever there are overlaps, they are addressing one by one, these markets. But we expect, I think within next 1 year, the entire integration will happen.
Yes, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Mumuksh Mandlesha from Anand Rathi. Please go ahead.
Thank you, sir, so much for the opportunity, and congratulations on healthy margins in agri segment. Sir, can you talk more about the vision plan related to new products which we plan to launch for domestic and exports market? So just to get more sense of what kind of products we are looking, which segments we are looking. Can you help us understand more on this?
See, so in the midterm business plan, we have identified the white spaces both individually, because we said we'll continue with all three brands, PowerTrack, FarmTrack and Kubota. And they have white spaces in each brand. So we're not present across the segment, in all the three brands, across all horsepower segments and all applications. So idea is to fill those white spaces. So the product lineup obviously will include wherever there are gaps. We intend to bridge those gaps. So there's a plan on the product development side in the next 4 years, how those products will really fill that gap. Because if we are looking at increasing market share, so obviously the entire universe needs to be covered. So that has been the plan, and the R&D team and product development team is working, along with the sales team, on the development of these products. And we'll see the lineup starting coming in from next year. The new product launches will start happening, from next year itself.
And something similar, what's the plan for exports market? What kind of products we are looking, sir, to particularly develop for the Kubota markets?
So one, obviously, their emission norms there are advanced, so it's not something what we sell in India. So that is obviously one requirement. Second, the quality standards, what we feel to sell under Kubota brand are quite high and stringent because their positioning is totally different. So that means some changes are required. Even in the existing portfolio, if you want to export, obviously for Kubota brand or co-branded products, some changes are being done, to really match the quality standards. So those things are there. So essentially, see, if you look at the exports from India, essentially it's we are always sub 75 HP segment, which really sells in India. Now, the maximum export we are seeing happening is in sub 40 HP segment, especially if you look at the European market, 20 to 30 segment, 30 HP segment is the biggest export segment, which is now happening from India. Almost 13,000 tractors got exported, last year under this segment. So this is one segment which is a priority, and not just Escorts. I think there are all other manufacturers also really targeting this segment now. So it's becoming quite competitive. But this is the segment where the product gaps are being addressed, at a first priority, which will cater to European market. And then as you go to the North America or Central American market, then it will go to the higher HP segment, which will get addressed.
Got it, sir. And just any update on the engine plant for the localization of the JV company?
So engine plant will come up when we go ahead with the greenfield facility, which is a plan. So, but probably the engine line may not come up immediately. It may come up in second phase. The first phase we intend to look at first setting up the tractor capacity, which will be doubled now. And post that, then we'll set up the engine line. But right now, I think it's still in the discussion stage. So the timing, etc., we don't know which one will happen. It can also happen together. It can happen in phases. So we have to come back because we've not really yet submitted the final plan to the board, both to Kubota board or to our board. But obviously the land acquisition plan has been, got the go ahead from both the boards. So I think we are starting this process from this month. So hopefully next 3-4 months we should be able to close that.
Got it, sir. Just lastly, on the agri margin improvement which we saw this quarter, has there been any price hike or a lower input cost benefit?
Yes, so both were there. So if you recall, in the last quarter, in September, we had taken a price increase. So we didn't get the full benefit last quarter. So that impact obviously has come fully in this quarter. And it also been some deflation benefit which we got from the commodity prices in this quarter in tractor business. So that is also reflected as part of the margin.
Got it, sir. Thank you so much for this.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi. Continuing on the previous question, so on the commodity side, have we seen large part of the benefit reflected in 3Q, or you are expecting further benefits in coming quarters?
So actually now we're seeing some tightening has started happening. Actually in construction equipment we saw some inflationary pressure in last quarter. So that's why you see the margin in construction equipment is slightly down. So we took the price increase there, in January to offset that inflation. And in tractors again we are hearing there is some possibility of inflation coming in Q4. Even though the quantum may not be high, but those I think numbers still need to be finalized. But we don't see a significant deflation benefit now coming in. I think the softness in commodity has already been, I think, more or less over. Even if it remains stagnant, I think we're good. But otherwise, we see a marginal increase.
Okay. And effectively, the impact which we have seen in construction equipment on margin, usually 3Q is a materially stronger quarter than second quarter. Predominantly because of commodity price increase, or there's something else there?
So it's a mix of the product mix, obviously, which is also one impact, and partly of the commodity prices. So it's a combination of both.
Got it. And lastly, continuing on the construction equipment, we are expecting this momentum to continue. However, if we go by outlook which MNC industry has given, which also has a reasonable contribution coming from construction end markets and the usual weakness seen in construction activities post-election, you expect reasonably good growth, or this growth percentages will moderate substantially in FY25?
Yeah. Thank you. Sanjeev Vijay this side. I'll respond to it. So in the short term, we see that there might be a little bit of uncertainty when code of conduct comes in at the time of elections, which is early part of Q1 of next year. And also we can anticipate some caution when BS5 kicks in January next year. So these are the two factors which we need to keep in mind. But otherwise, if we look at overall demand and the speed of the projects and the kind of application of these equipments, I think the average demand will continue like what it has been in this year, other than these two factors which can be a little bit of disruption next year.
Got it. Thanks and all the best.
Thank you. The next question is from the line of Pramod Amte from InCred Equities. Please go ahead.
Yeah, hi, sir. Thanks for taking question. So, first question is with regard to the new emission norms, which I think got implemented for over 50 HP tractors. What's been the experience there at the consumer level?
So, the CREM 4 norms which got implemented last year, there has been an industry shift. So, basically, there's been a movement downwards into the 41 to 50 HP segment. So, normally the industry size in this segment is about 7%, which has actually now come down to 2%. So, industry for this particular segment will be around 20 to 22,000 units for the entire. So, there's been a drop of about 30,000 units for the first 9 months.
And variable, did the industry take the entire price hike required to pass on meeting the emissions, or there was a challenge?
So, the entire price has been passed on.
Okay. And second one is with regard to the tractor industry outlook, which you alluded to. Compared to a single-digit decline, you are there in the December quarter, you are already talking about a double-digit decline. Does it take a substantial heavy lifting from the government or other agencies to do a revival post April?
So there, see, as I had mentioned earlier, the linkage to the tractor industry is primarily on account of the monsoons. So we'll need to see how the monsoons pan out for the next physical year. That is a primary thing. The government's focus remains there. Also, it will depend on when the elections happen in the quarter one. If the elections are announced for the period April or May, then it will impact the industry, because normally the farming community gets involved in these kinds of elections. So that is the scenario.
And so the second question with regard to the railways, how do you read the big capex announcement in railways? Which part of parts or other countries will help you? Because there was a plan announced for this year, and there are no plans announced for next 4 to 5 years. If you can give a more details on what parts will go with that segment.
Yeah, hi, Ankur this side. So, as you know that we are basically into the business of supplying components for various kind of rolling stock which is being manufactured in India. And if we talk about majorly, if we divide this into two segments, the first one is the freight wagons. And the government has already given long-term orders for manufacturing of freight wagons to various wagon builders. And there has been I would say, a continuous good tracking in this business, and the wagon manufacturing is increasing month on month, and I think this momentum will continue. as they are laying out the dedicated freight corridor also to accommodate these newly manufactured freight wagons. If I talk about the passenger segment, in this we have been hearing there is a lot of traction in terms of Vande Bharat coaches. So I believe the rolling stock manufacturing will be having a good growth in the coming years, and with that we are also developing a lot of new components for these Vande Bharat kind of passenger coaches. So I believe we will be having a good growth in terms of industry, and we should also be getting a good benefit out of that.
Sure. Thanks for the answer. All the best.
Thank you.
Thank you. The next question is from the line of Abhishek from Dolat Capital. Please go ahead.
Thanks for the opportunity. Sir, what was the 9-month revenue and EBITDA of Kubota Agri Machinery and Escorts Kubota India Private Limited?
So we don't have the ready number because it's a joint venture which gets consolidated, so we don't do line-by-line consolidation there. But like I said, roughly it's 500 crores average revenue which comes, each quarter. So last quarter, because the season quarter, it was about 600 crores revenue. Overall, EBITDA is positive. So if you look at consolidated numbers for manufacturing and CLGV combined, they were positive EBITDA, but obviously EBITDA numbers are lower than what Escorts has.
Okay. So EBITDA in the last year, EBITDA was in the range of around 1 or 2%. So it has moved up because of the localizations?
No, so there was a very good traction on the harvesters and transplanter business last quarter. So we got a decent margin in the sales company, on that account. So overall combined, if you look at integrated EBITDA margin, I think for both manufacturing and sales JV are roughly, I think about 5 to 6% now. So it's improving, which is a positive sign. And there's the idea, but ultimately the idea is to take it to the level where Escorts is, post-merger. And that's the direction on which we'll be working.
Okay. And in the export business, how is the geography mix in Europe and US market?
So as I mentioned, both the markets are seeing a downtrend. So there's a degrowth. It's not just for us. I think globally we're seeing in Kubota has seen that sort of degrowth now coming in the tractor. It was post-COVID, when the lockdown was there was a lot of demand for the smaller tractor, which is what I actually had, given this big boost to the small tractor segment in both these markets. And now once the lockdown is open, we're seeing some traction is coming, the demand is slowing down. And then again, the huge inflation which has happened, that's another thing which is impacting the demand in these markets. Plus obviously competition from other markets, with the players from India and Korea, which are becoming very aggressive. So that's another reason we're seeing some sort of, slowness in the global numbers of Kubota. But that's the reason, which is the advantage, which is why Kubota wants to leverage Indian operation, to use it as a sourcing base where they can compete in those markets on cost front, with the other players, the competitors. So that's why you see the good opportunity, going forward for the next 2-3 years, see good numbers coming in from export now.
So what is your target for the export mix by FY26 or FY27 in overall tractor volume?
So overall, we're looking at least getting to the number 2 position in the export. So today, last year we did only about 78,000 tractors in export. But looking at the potential, I think we can easily reach 20,000-30,000 tractors, in next 2-3 years.
Okay, thanks. That's all from my side.
Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. Before the question, just a clarification, sir. When you talk about the inventory numbers in terms of days, we are taking the last 3-month average, or what is the denominator what you're using, sir?
It's an annual number.
Sorry, annual number, is it?
That's right.
Yeah, okay. Thanks a lot for that. And sir, on the Chaitra Navratri in April, if you can just help us understand how big is that in terms of seasonality for the industry and for yourself, as to how much of the volumes come from that particular season, because we understand Dussehra is a very large one for the industry in annual calendar, but just to provide a context as to how big this season could be, if you can just help us understand that.
So these Navratras compared to the Navratras in October-November season are relatively smaller. They are relatively smaller. Yes, they do have some impact, but they are relatively much lesser in terms of volume business compared to the Dussehra, Navratra and Diwali Dhanteras period.
Okay. But is it fair to assume that it should be more like half of what you typically see in the Navratri Dussehra season in October, September, October, or it's bigger than that?
It's slightly lesser than that.
Slightly lesser than. Thanks a lot. And sir, on the network side, because compared to the market leader, if you can just help us understand what would be a network gap right now, and which are the regions where there is opportunity for you to expand your network, especially with the given product portfolio which you are trying to build with Kubota. What could be the network opportunity here in the domestic market?
See, in terms of the network, our current focus is actually the western and the southern markets. Primarily, it's the western market because western India, that is basically Gujarat and Maharashtra, they contribute about 20 to 21% of the total TIV. So our primary focus is on those markets. In our stronger markets, our network is more or less in place. There are some actions related to restructuring, but in our stronger markets, it's more or less in place. The primary focus going into the next year would be in the western part of the country and a bit in the southern part of the country.
And south, how much will be the gap, sir? Is there also a meaningful gap between you and the other larger players in the region on the network side?
Yes, there is a gap. But honestly, South industry has shrunk over the last 18 months. It now actually contributes only 15 to 16% of the total All India TIV. So our primary focus now, after the northern markets, is the western part of the country.
Fair enough, sir. And on the last question on the pricing environment, because we do understand it's a pretty fragmented industry. There are a lot of smaller brands which are powerful in certain regions. Any given small town has like 15 brands available nowadays in tractors, even in southern market, which is shrinking. So how has the pricing discipline been for the last couple of months when demand has been weak, and how do you see that going forward, given the fact that the profitability of the industry is inherently pretty high? So how should one look at the pricing environment? Because it's not about only 2-3 players holding the price line, but it's a pretty long list of industry participants. So how should one look at the pricing environment, given that we're having this down cycle after a fairly long period of time? We have had a pretty good run for the last several years now. So how should one look at the pricing discipline going forward, sir?
See, so over a period of time, the pricing discipline has been maintained. So there is a slight a change in the pricing when the peak seasons come in, wherein all the manufacturers dole out certain discounts or certain schemes, customer schemes, and that is for a set period of time. So once that period is over, the discounts or the customer schemes are rolled back and a normal pricing level comes into play. So the pricing more or less is similar. It is different in different segments, but more or less across the major players, it is at a similar level.
Fair enough. So before I go, just a confirmation of Vahan, there was some problem with the database which you had highlighted earlier. Is it still continuing, or you see the Vahan data with the lag is now kind of reflecting the updated retail environment for tractors, sir?
So the Vahan data, the updated data, the last data which came in was for the December period and also for the YTD period. So it's corrected now. It's more or less in line.
Thanks a lot, sir. Thanks a ton, and best of luck, sir. Thank you.
Thank you.
Thank you. We have the next question from the line of Kishore from JK Capital. Please go ahead.
Yes, hi. Thanks for the opportunity. I had a question more around the long term in terms of where do you see the industry size stabilizing? Is it mostly penetrated in terms of new growth, and when will it move to a replacement cycle?
We're looking at 6 to 8% CAGR over a long-term perspective. That will continue. Looking at the focus of the government and various other aspects, I think 6 to 8% CAGR should be a decent enough growth.
And for how long, sir? Like, do you see any saturation coming in, at least in the near, let's say, next 5 to 10 years sort of a window, or is it well beyond, in your opinion?
So it's very difficult to comment, but not in the near future, not at all. No saturation at all.
Got it. So thank you. Second question I had is on the, the equipment beyond your tractors, especially with your now Kubota getting amalgamated. How do you see that other equipment beyond like your transplanters, harvesters? How do you see that market evolving in the next, let's say, 3 to 5 years?
So implement market obviously has a good potential. So as we know, India has done more tractorization, so real farm mechanization is still to happen. So it's only the basic implement which are getting used in India. So all the high-tech products, I think, will get introduced gradually, and we're seeing the growth happening. Like harvesting, already 70% penetration has reached, in this. So obviously there are earlier stages where you need to really have better implements and better attachment, which will come. So that's one segment which we think should continue to grow, I think, in future. Even though you, like you said, tractor industry may hit a saturation finally some days. We don't know when that day will come, but that's where I think the opportunity really exists, for other equipment to, come into play, which is why we're looking at most of the OEMs now, going into that category.
Got it. And last thing is, are you looking for any sort of an external support from, let's say, the government or any big levers which can help you sort of grow this space a little faster in the longer term?
Well, I think in terms of support, as the government policies are favorable for the agriculture sector, and we expect the same trend will continue. I think the sectors in which we are operating, infra and agri, I think both are the favorable sectors from any government, irrespective of what government comes to power. But yes, of late you've seen the support from government side in terms of like Manrega outlay has come down. So you're seeing the liquidity, issues are coming up in the rural areas right now, which is why the last 1 year seeing some demand got impacted, not only across only tractor segment, even in other segments, we see the rural market has really had some impact on the demand side. But we expect that really will, improve going forward. Like the MSPs are going up now, so procurement is going up. So which is a favorable sign. I think from government perspective, we think the policies will remain favorable, as far as the farmers are concerned.
Got it. And anything particular on the implement side? And with that, I will come back in the queue. Thank you.
Thank you. Participants, you may press star and 1 if you wish to ask a question. The next question is from the line of Pramod Amte from InCred Equities. Please go ahead.
So thanks for this follow-up. You had planned to or taken a permission to set up an NBFC, right? So in the context that recently there have been some instances of NPAs, would you be going aggressively on this layout? Would you be setting up all by yourself the channels, or what's the plan on the tractor financing?
So obviously the idea of setting up captive finance company was to make sure the customers are not lost to competition. So there are areas where we are, seeing some sort of pressure where the financing is an issue. So the idea of having this finance company is to supplement the main business, core business, which is in the agri side. So obviously that's the objective. So, but at the same time, the company will operate independently. So the idea is not to really get into the NPAs and start getting into the poor quality of customers. So obviously that aspect will also get addressed and be taken care of. So I think it will be a good balance which we intend to achieve. And if you look at all captive finance companies, I think most of the OEMs are operating with roughly 30% penetration, the captive finance arm. So which is what I think we are also looking at going forward. It's not going to be 100% financing. The other financiers who are already working with us will continue to work with us. And wherever the financing is really available, that's not our target segment. The idea is to approach the customer and markets where they are difficult in getting finance, and there are good quality customers available. So that's the segment which we will really, target, in the finance company.
And any timeline, sir, when you want to roll it out and what penetration you will achieve this year or next year?
We just incorporated the finance company last month, and we intend to apply to RBI for license now in this month. So it takes, I think, some time, 6 to 8 months for RBI to really come issue the license. And once we get that registration in place, Till that time, obviously, the entire back-end action will be done, and hopefully within next fiscal, we should be able to launch this company and start financing.
Thanks. And the second one is the follow for this trend emission. There were also discussion to classify tractors as agri and non-agri and give a concession only for agri. Anything agreed by the government how this concession will apply to non-agri tractors?
So there is nothing of that kind as of now. So all tractors are primarily from a agri perspective.
But the concession was sought with the thinking that the tractors are sold to agri. But as we know, there is a 30-40% which goes to transport. Right? Any thoughts there? Any confusion?
See, like I said, the main purpose of tractor is to be used in agricultural application. The use in haulage or the other activities is secondary use. It's not a primary use for the tractor. No one buys a tractor only to put for commercial activities. So the main purpose will still remain agriculture, which is why this distinction hasn't been done by the government.
Okay, sure. Thanks a lot.
Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot, sir. Most of the questions have been answered, but if you can just help us understand on the replacement cycle, given that we've been having both agri and infra doing very well, and normally in such cycles, the tractor wear and tear is also higher. So if you can just help us understand, how do you see replacement cycle, or by when do you expect replacement cycle to kick in a good way for the industry, given the strong growth that we've seen in the last 3-4 years?
So, you see, replacement cycle of a tractor depends on the application it's being used and also on the geography. So, more developed markets, actually, and from an agri perspective, the replacement cycle varies between 5 to 8 years. If a tractor is actually being used for both agri and commercial perspective, then the replacement reduces a bit. So it varies between 3 to 6 years or even 7 years. But a normal replacement for a natural tractor varies between 5 to 7 years on an average.
Thanks a lot, sir. Thank you.
Thank you. Ladies and gentlemen, we have no further questions. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you, ladies and gentlemen, for being present on this call. For any feedback or queries, please feel to write us on investor.relation@escortskubota.com. Thank you very much and have a good evening.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.